Hello, everybody. C. Ray Brower here with your perfect home, and we got some problem with our Facebook somehow, some way. I'll work on that. But we are going to be talking with Corinne here coming up next about some reverse mortgage stuff. So here we go. And we're back. How are you today, Corinne?
I'm good. How are you doing?
Just another day in real estate paradise. It's been quite a day so far today.
Well, good. That's all right.
Yeah, it's all good. It's all good. How about you? You said it's a little cool over there in Livermore.
It is. It's cooled off quite a bit. I was out seeing a few realtors and seeing what they had on the market today for sale. And it's just like a party when I go out and see people. We just have a good time catching up and seeing what's going on. So yeah, it's all good.
Very nice.
Yeah.
Very, very nice.
Yeah.
All right. While we're sitting here, I'm trying to get us all live again because a couple of these, for some reason, didn't go live today. So you've got some stuff to talk about today, reverse mortgages, some facts and some myths, and try to update people because I know reverse mortgages always used to have a really bad name.
Absolutely. That's absolutely true. No doubt.
Yep. But they are definitely different now.
Yes.
So how about why were they bad before?
Well, a lot of it because they were not regulated. There was a lot of people offering them that were not. I don't think they were very truthful about the way the things really worked, what the risks were in that. There was no insurance on those loans. People could lose their homes. They were handled very, very poorly. And I'm not sure what year the government stepped in and really took a long, hard look at those. And FHA is actually handles most of the rules that are done on that. So they're insured. You can't lose your home. You can't, you have to be well educated about them. You have to have some counseling, and we'll go into that. So, it's very, very cautious. There's a waiting period. There's just a lot of things that are put in place so that you know exactly what's going on before you go down that road.
That is always a good thing when there's protection for you and your loved ones on your estate. That estate planning and trying to get that all together. I don't know if I've ever shared with you, but my dad, many, many years ago, he put together his living trust. Told me, I was a successor trustee and I was going to be in charge and everything. And then when mom got put into convalescent care, he went to take her out of the trust so that she could get Medicare. And the attorney that set up the trust actually put himself as a successor trustee. And he was nowhere to be found. So it ended up costing Dad $15,000 and several months trying to get it back where he was in charge and get mom off because it had to go before 3 judges that they could do it because she's now incapacitated and couldn't speak for herself. So it was horrible. Wasn't a reverse mortgage, and that's what we're talking about today, but it's still legal stuff that.
And, it's very common that if someone's looking to take out a reverse mortgage, that they invite their children into some of the appointments and share with them the information about how things work. Because, of course, if your parent is 80 years old and they're talking about taking a mortgage, the children are like, what's going on here? Is somebody trying to rip them off? Why do they need this? And I think it's a good idea if they can be involved as well, so everybody understand what's going on, because their children may not, even though they're adult children, they may not be in the area. They may not understand at that moment what the parents' needs are. They need some additional help in their home, even just things like the yard work and grocery shopping for them, or maybe driving to a medical appointment. And all those things cost money. So, it can be very helpful to keep everybody, well aware of what's going on with an older parent as well.
Yeah. I mean, getting everybody together so everybody's on the same page is always very, very critical, no matter what you're doing.
Yeah.
But especially when you're dealing with elderly parents, and you've got, again, we no longer everybody in the same hometown, right? I mean, it's very common for everybody to be spread clear across the United States.
Absolutely.
Let alone even just the same state.
Right.
Very common for people to be everywhere. And so, whether it's a Zoom call or whatever, getting people together is very, very important.
Yeah. And, mom and dad, they probably want to stay in their home as long as possible. Now some people want to go to some, 55 plus places, or where there's a little more help in some of these, 55 plus developments. And other people are like, no, absolutely not. I'm staying right here. I am not leaving this house. And so, there's options.
Yeah.
There's options.
Yeah. Options are always good.
Yeah, absolutely.
Well, very good. So, what are some of the facts today?
Okay. Well, let's jump in here. And I do have notes. That's why I'm kind of looking off to the side.
That's all
here.
Right.
Notes.
That's all right.
So,
I understand.
Yeah.
I got to do that every once in a while myself.
Because it is a complicated subject, and this is very high level. There's a lot more to it, but this is just some basic things. So a reverse mortgage is a unique financial tool that allows homeowners to convert a portion of their equity in their home into a tax-free cash withdrawal without selling the home or making a house payment. That's kind of the quick, down and dirty explanation of what that is. So I've got some common myths for you. Hopefully we can get through them in the time we have.
Okay.
People say, oh, I don't want a reverse mortgage. The lender is going to own my house. No, that's not true. It's the same thing as anytime you've had a mortgage. A reverse mortgage is a mortgage. The bank has a mortgage on your property. Now, if you don't pay or agree to, whatever the terms are of that mortgage, then of course there's bad consequences to that. But the lender, it's like any other loan. There's a mortgage on the house for a certain dollar amount. That's the same whether it's a regular mortgage, reverse mortgage. It doesn't make any difference.
Okay.
Another one, I will lose my house if I take out a reverse mortgage. That is absolutely not true. That is also a big misconception. And that's what did happen in the past. If your balance of your reverse mortgage had exceeded the value of your home, yes, they did step in and take the house. That happened. That can no longer happen. Absolutely cannot happen. So the loan that you have, a reverse mortgage, is a loan. That loan is not paid back and not required to be paid back unless you move out of the house or you pass away. Now, if you pass away, your heirs, your beneficiaries on that home, have 6 months to decide what they want to do. So the bank doesn't come along in 2 weeks after someone passes away and say, hey, you got to do something with this now. You've got 6 months to figure it out. What do we want to do? Do we want to take our own money and pay that mortgage off and keep the house? Do we want to sell the house? And then divide up, whatever the equity is that's left in the house amongst the heirs. So they cannot take your house. Another thing that happens is sometimes people who are older, go ahead.
You said they had the option to sell or to pay off the mortgage.
Yes.
And they had 6 months to do it. Now, is that 6 months to make a decision?
Decision.
There we go. Okay.
They have 6 months to make a decision how they want to handle it. So let's say, for ease of an explanation, there was one beneficiary and that beneficiary has a lot of cash in the bank and says, you know what, I'd really like to have this house. I'm going to pay off that mortgage. I'll pay off that reverse mortgage. And now there'll be no debt and I can just transfer it into my name. That's not the typical thing that happens. Usually the house is sold. But it is an option. And again, you have 6 months to figure out what it is you want to do to figure that out. So nobody's knocking on the door 2 weeks later. So that's a good thing.
After you've made the decision, how long have you got to? So at 5.5 months, we decide we're going to sell the house. We get hold of a realtor. The realtor says, okay, we need to do this, this, and this to get it ready for market. We won't have it ready for market for 1.5 months. And then we're going to put it on market. Do they have a time frame then to actually close escrow?
That is a good question. I'm not 100% sure about that one. I apologize.
Okay.
It could vary.
I'm one that's always good for that kind of thing.
There is, I know there's a lot of flexibility built into it compared to what there used to be. There's definitely a lot of flexibility. So some people say, I can't afford a reverse mortgage payment. There is no payment. The money that's borrowed just sits there. It does accrue interest because that's how a mortgage works. It does accrue interest, but there's no payment to be made. However, you must continue to pay the property taxes and the insurance. You need to keep that current. And that's the same as any other mortgage that exists.
Right.
You got to keep that current. Another statement I've heard is the money I take out from a reverse mortgage is taxable. And that is absolutely not the case. The money that you take out from a reverse mortgage, you can use the funds for anything you want. It could be home improvement. It could be a vacation every year. It could be additional funds that you're just sitting on to help you pay for some help that you need around the house. You may want to do some remodeling. You may need to fix up a kitchen, add an ADU in the backyard. Could be anything, but you're not restricted on how you use those funds. Here's another one. I was told I could not buy a home with a reverse mortgage. Absolutely not true. So when we see this, most of the time, I'll see someone who has a home. Let's just say it's in this Bay Area here, and there's a lot of equity in their home. And now they're moving to Texas to be closer to their children, or Idaho, or Washington, wherever, South Carolina, wherever that may be. So as a financial plan, they can buy a house with a reverse mortgage. There's a certain amount of money they have to put down because they're only going to loan you so much. And then you can keep your extra money, the profit that you had from the home you sold. You can invest that money. You can use that to give you additional money per month to live on. Maybe your pensions or other funds are not quite as large as what you thought you were going to receive. So it's also a way to do some financial planning and how to juggle all that money around to make it the best scenario for your particular situation. And so there is a huge misconception that you cannot buy a house with a reverse mortgage, and you can. Now, with a reverse mortgage, something that we haven't talked about yet is the older you are, the less money you're going to have to put down. It always works that way. So it just depends, and that depends on your age.
What's the youngest that you could take out a reverse mortgage?
I believe it's 58, and it will vary a little bit. So the way the system or the way the reverse mortgages are calculated is based on your age. So if someone's 60 and takes out a reverse mortgage, they are going to be qualified, if you want to say that, for less than somebody who's 90. Because somebody who's 90 may only have 5 or 10 years left. Somebody who's 60, they're expected to live another 30 years probably. So they have to make the equity stretch out over time. So the calculation is based on age.
Okay.
Another thing is I already have a mortgage. How could I get a mortgage? Well, if you're looking to get out of if you have a mortgage, you've got to make a mortgage payment. And
Right.
now you've retired. You need some extra, again, you need some extra income for a variety of things. You can refinance your current mortgage into a reverse mortgage, and now you will no longer have that payment. You'll still have a mortgage, but you're not making payments on it. So you've freed up whatever those payments are that you're making for the principal and interest payment that you've made in the past, because there is no payment. So now you have extra funds coming in for, again, to pay someone to do all of your yard work, to take you to the doctor, come in and clean your house, pick up your prescriptions, just the things that you need as you get older. A lot of people have asked me or said, oh, I heard I have to take a class. I don't want to go take a class. I don't want to do that. I haven't been to school in 50 years. I don't want to take a class. Or I don't know how to get on Zoom, or, whatever that is for a class.
Right.
So you do not take a class. You're not going to go over to the local junior college and take a class about a reverse mortgage. What happens is there is a HUD certified counselor who you have a phone call with. And it is a long phone call. It's a couple of hours. And again, that's one of those scenarios where I encourage people to have whoever their beneficiaries, their kids or grandkids, they can be on that call with the person and hear all the information about a reverse mortgage. It will, they'll talk how it works, the good things, the bad things, what your obligation is, what happens if you get sick. For instance, one of the things I didn't mention is, let's say you fell and got hurt badly, and you were out of your home for 4 or 5 months. You can be out of your home in a medical facility for at least 6 months before anybody's going to be knocking on your door and asking you, do you still live in the house? Because you have to live in the house to keep the reverse mortgage active. So there are some little tweaks and things that are done in that case. Because it used to be if you were out of your home for any amount of time, they could swoop in and take your house and make you sell it. So that piece has gone away. That piece has gone away. But anyway, the counseling with the HUD approved counselor is very, very informative. They walk you through all of the information. They talk about your specific scenario, what's going to happen, how it works. And the things that I've touched on today are just the very high level information about it. There's so much more. How you can, if you wanted to make payments, you can actually make the interest payments on that loan on a reverse mortgage, and your balance never goes up if you want to. And that actually pays you a certain percentage that you make money on. So there's all these little twists and turns and angles. And again, it is a very powerful financial tool. So that's kind of the reverse, a lot of the misconceptions about that.
So if you've taken a reverse mortgage out and you choose to make the interest payment, are the interest payments like the interest payments on your regular loan where you're paying a large amount to interest, or is it more like a straight interest loan?
It's like a simple interest loan, more like a HELOC. And when you pay that into the HELOC, not the HELOC, the reverse mortgage loan, that is, the lender has to pay you interest on that at a very favorable rate. And so you are offsetting what's being charged on the reverse side. So it is a financial tool that a lot of people don't know about. It's something newer that has transpired with reverse mortgages. And so people will do that as well. It's very interesting how that works.
So your reverse mortgage is a simple interest loan, not a compound interest loan.
Correct.
Okay.
Yeah.
Okay. So very interesting. And unlike a HELOC, the interest doesn't change?
Um,
Or it does change like a HELOC?
No, the interest does not change on the
Okay.
reverse mortgage. The interest, if you're interested in paying it back and keeping the reverse from increasing, that interest rate will fluctuate with the market. So you have two pieces, two sides on the
Okay.
reverse.
Okay.
Now, do a lot of people, want to make payments to the interest and keep the loan from growing? Most of them don't, but some of them have talked to a financial counselor, and for a variety of reasons that makes sense for them.
Right.
Yeah, I'll leave it at that because it gets
Right.
just
Yeah. I mean, that's definitely, you gotta, that we don't need to get clear on into it. Like you
No.
said, we need to keep it high level because
Right.
we don't want to be misleading in any way, shape, or
Correct.
form.
Yeah.
But those are some interesting facts. I like that. That's something I didn't know.
Yeah.
I mean,
it's not your grandma's reverse mortgage anymore.
Right.
It's a whole different world. Yeah.
As is just about everything in finance, right? I mean, we're both old enough to remember the crash of the credit unions.
Oh, yeah. Yeah.
Right? I mean,
Yeah.
credit unions were a great thing, and then all of a sudden they weren't. And now, they are a good thing because they've put the measures in place to make sure that they're as safe as a regular bank.
Right. Right.
The savings and loan crash was.
I was right there.
Yeah. I mean, I remember it. I remember it.
Yeah, it was. That's when adjustable rate mortgages came into vogue, shall we say, during the savings and loan crisis, because at that time, trying to think now. They were paying out. Oh, here we go. They were paying out back in like the late 70s. Interest rates, you could get a savings account for the same as a T-bill pricing, and that was around 15, 16%. So the banks were paying out 15, 16%, but they had all these old loans on the books that were at 4%, 5%, 6%. And in those days, the banks held on to those loans. They were not sold in the secondary market. It was none of this Fannie and Freddie and all that kind of stuff.
Right.
So here they are. Their income is only 4 or 5% on their money, but yet they're paying out 16%. So hence you had the savings and loan big debacle back in the day. But I was just getting into banking back then in the 80s when all that happened. But
okay. So you got to live it.
Yeah.
I just kind of heard about it. I was working construction and kind of heard about it. You were right in the middle of it.
Oh my gosh. I was, I've been, you had savings and loan, you had the crisis, you had about 1989, there was a recession. Then there was the, what did they call it in the early 2000s when Silicon Valley had a big, what did they call that though? I can't remember.
That was
not computer, but but it was all the tech companies. They were really doing well, but they weren't really making anything yet. Right. And so once they got over that, then of course time was good again. And of course, if I had a crystal ball, I would have bought up, everything I could in Apple stock for 75 cents a share or whatever it was, when that crash hit. And anyway, there's been, I've been through a lot of those.
my very first client, he worked making robotics, miniature robotics. Actually developed a underwater robot that welded underwater, right?
Wow.
And they was right next door to Apple. And his financial advisor at the time, he asked his financial advisor about buying Apple, and his financial advisor told him no. He was fully invested in Enron.
Ouch.
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 Ouch. Exactly.
Yeah.
Walked away with the goose egg.
Ooh.
So.
Yeah, we've seen a lot of that kind of stuff.
Yeah, no, that's the hazards of being invested in only one thing.
Yes,
and not
I
being
agree.
kind of diversified among several things. And so,
yeah. I think did they call it the tech bubble? Is that what it was called? Back in the early 2000s?
It's something like that. I can't spit it out either. As soon as we're off air, I'll go, oh yeah.
There's been too many bubbles and things. I was on a call, I don't know, it was yesterday or the day before, but it was a fellow who was talking about the current market, et cetera, et cetera. And the question was, hey, when are rates going to come down and what's this going to happen? And he says, I have found that it's extremely dangerous to make a prediction of what's going to happen. He said, you never know what's coming.
Yeah.
That's my advice for the day.
That's and that's really, really good advice. I mean, when I owned the transmission shop, people would come in and, diagnose their car and you need a transmission. And well, I drove it in. Yes, you did. And you can drive it out. Well, how long have I got? And I said, that's a great question. It really is. And last week I could have told you, well, why can't you tell me this week? Well, because I had the crystal ball last week, but the guys were playing catch with it and dropped it.
Yeah. Yeah.
So can't predict the future no more. It worked really good last week, but nope, not this week.
I'm a little leery of, hearing people that say, well, this particular thing is going to happen and it's going to be right at this time. And I'm like, okay, well, maybe
yeah.
So after all these years, that's kind of how I feel. We'll see.
Yeah, exactly. We'll see. Hide and watch.
Yeah. Yep.
Corinne, as always, it is a pleasure having you on. I really appreciate all your time. You want to give everybody, I know it's been scrolling right there for a little while. I missed it in the very beginning because we was getting us back live. But if you want to tell everybody how to get hold of you, that'd be wonderful.
You can email me on the number you see there, or you can call me 925-785-5308, and I will answer my phone. I promise.
She does. And if she doesn't answer, she calls you right back. She's just like me. Thank you so much, Corinne. I really appreciate you again. Everybody go out and be the sunshine in somebody's rainy day. Remember, see Ray to find your perfect home. And of course, share. Sharing is caring, and ring the bell. It depends on which one of the platforms you're on, but make sure and get signed up so that you don't miss the next time we're on. You all go out and be the sunshine in somebody's rainy day.